Good morning and welcome everyone to the Money Control live stream. You're watching markets with Santo and CJ. Well, it looks like a weak start again on the offering. If you look at the Nifty futures on the Singapore exchange, they're indicating almost a 100-point cut at this point of time. So yesterday's whatever sort of support we were getting, Santo, we saw that got sold into towards the end of the session and we ultimately closed lower. And today also it seems like the market sentiment is going to be quite weak. If you look at Wall Street, the cues from Wall Street were also quite negative. The S&P 500 index, the broadest gauge out there, fell to a 2-year low, hitting their November 2020 lows at this point of time, largely because of concerns that we have been talking about for the past few days now. And US dollar again strengthening, going beyond the 114 mark, 114.6 was the last tick on that level. So clearly the rupee will also be in question today. Whether we see another record low on the rupee remains to be seen. Apart from that, Santo, I think generally the only saving grace could be the fact that today is Wednesday and tomorrow is monthly expiry, and generally we see that a day ahead of the monthly expiry, traders tend to square off their position, and you can take it for granted that there has been a lot of short positions been added in the market over the course of the past few past 2 weeks. And if there is a covering happening probably after 2 o'clock, maybe we could get a positive close in the market today. What do you say?
Well, for one, the battlefield still remains rupee. That is a big area of concern, and even though the situation is not as dire as it was in 2030, if you look at India's macroeconomic fundamentals, they are in a far better shape than they were at that point in time. Still, there is no denying the fact that whenever the rupee is under pressure, you will see some bit of FI outflows. That is but inevitable, and that is what is hammering the market at this point in time. And at the point you raised about some bit of short covering coming in theory, yes, typically those who go short don't wait till the very end to square up. Some bit of squaring up does take place, and I think that could give some kind of a cushion. That said, the focus has once again shifted to fundamental factors, technical factors more than fundamental factors, and 16,800 is the key support level that is being eyed by bulls at this point in time. Again, if you speak to HNIs, been quite bullish till about a couple of weeks back. The mood there has now changed because most stocks have taken a fair bit of pounding over the last few trading sessions. So obviously they would have run some losses on their mark-to-market positions. So they would now be very cautious about loading up in a big way. They would rather like to take it slow. And all these factors, when you put together at this point in time, maybe the downside could be cushioned to some effect, but the market's unlikely to rise in a hurry anytime soon.
Well, Santo, I think clearly at this point of time, I think it will be traders who would be probably more active in the market than any sort of investment horizon, people with investment horizon on their mind, because they would still want to wait this tide out. They would want to see how, because see, this has not been driven largely by domestic factors. This has been driven by global factors. And until unless global factors settle down, especially the US bond yield, the US dollar index, until unless there is more clarity there, I think it will be a little too premature to go bargain buying in a market like this. You would want to wait it out a little bit more, and especially with very key events such as the RBI's monetary policy coming up, day after tomorrow. Investors would want to wait and see what the RBI has to say, because RBI, it seems, its hand will be forced into continuing to hike interest rates going ahead. So of course a lot of
CJ, but also the commentary on inflation, that is again something now market will be closely
commentary inflation as well as the rupee. I think more than inflation, Santo, given the fact that inflation has shown tides of moderating, I think the rupee becomes a more crucial monetary policy issue at this point of time than the inflation, in my opinion.
Well, that said, let's dive into the stocks on our watch list for this morning, beginning with Chambal Fertilizers. CJ, the company's first quarter earnings were a big surprise, although margins were under pressure. But as far as the top line goes, the company managed to come out with a really good performance, and that kind of changed the tide for the stock again. It's been quite volatile over the last couple of months, went on to hit a high of over 500 plus in April, then plunged all the way to around 272, and from there it's rallied again and some bit of profit.
It's been very, very volatile.
Fairly volatile stock for a usually dull industry like fertilizer. But here are the key things in the company's favor. Now the company is planning to increase its capacity for technical ammonium nitrate. Now India imports most of its requirements for technical ammonium nitrate. This is a major ingredient in the mining industry as well as in the pharmaceutical industry and explosives as well. Besides that, Chambal Fertilizer is also increasing its capacity in nitric acid, both weak nitric acid as well as concentrated nitric acid. Now, FY24 according to Elara Capital is likely to be a slightly slack year for Chambal fertilizer, but then on you could see once its technical ammonium nitrate plants get commissioned sometime in FY25, that is where the big kicker will actually come in. So, this is a kind of a long term play at this point in time.
Yeah, I mean clearly Santo, if you look at the near term cues, they are not really looking that rosy for Chambal fertilizers, especially with respect to the urea division, where if you see the June quarter earnings, volumes did decline almost 2% on a year-on-year basis, and things are not really looking that pretty. Analysts are expecting a flattish performance in the September quarter. Apart from that, of course, if you look at the main issue for margins, of course, for Chambal fertilizer, and one of the reasons why it saw some bit of earnings cut in Q1 Santo was the fact that elevated gas prices has been something that of a concern. Yes, fertilizer companies have been able to make some of that or offset some of that because of the higher subsidy that the government is providing, but this is in turn resulting in higher receivables for them, and which is overall denting the finance cost and therefore affecting margins in that sense. So that is the linkages how elevated gas prices is indirectly actually contributing to a decline in margin. I think this is one trend that is likely to continue because gas prices, especially for industry, yesterday you had explained it very beautifully, Santo, how consumer focused companies were getting more preference from the government as far as natural gas allocation was concerned, whereas industry was not. And because fertilizers do largely depend on natural gas as a feedstock, that is why I think margins probably is something that will remain under pressure going ahead. And also, another major worry for the June quarter was the IMA CID JV that they have. The earnings contribution from that had fallen considerably because of a planned shutdown or closure of about 35 days. Now the business there is also not expected to recover quite strongly in Q2, and therefore I have my doubts whether the Q2 performance could lead to more earnings cut going ahead. Well, the first technical pick on my radar today, we have promised you 2 technical picks for this market volatility, and the first one is Santo Tejas Networks. Now this is one stock that had taken a decent amount of beating recently, but if you look at the overall long-term chart, it is clearly in a very classical uptrend, is what a lot of technical analysts explain it as. They believe that the stock has now really found support around the 586 rupees mark, and from there we could see another upswing going as far as probably 20% from current price levels over the next 3 weeks. So that is the the call that Swastika InvestSmart has made. They are giving a buy call, tactical buy call on the stock over the next 2 to 3 weeks, expecting almost 20% sort of returns.
Well, Tejas Networks, if you look at this company from a fundamental perspective, not so much from a technical, the story is still more of a theme story.
Yeah,
it's in the right line of business. You have all those nice words there, defense and all that, but still the numbers are still not reflecting. They're still not.
I think that has been the case with a lot of defense names, Santo, won't you
not
say?
necessarily with companies like HAL, Bharat Electronics, which have come out with very good numbers. They've got strong, good order book positions, and the earnings visibility is pretty much there, and they've demonstrated it quarter after quarter for some time now. But in the case of Tejas Networks, very clearly that does not seem to be the case, at least for the time being. The quarterly numbers have been pretty much flattish. And if you look at the bottom line, then it's been quite a while since the company, almost last 3 quarters now, the company has been reporting losses.
Yeah,
so neither top line nor bottom line inspires much confidence at this point in time. Besides that, you're also seeing institutions trimming exposure to the company, which they did in the June quarter. So I would rather give this. Yes, there is action in the stock.
Yeah, definitely.
There is action in the stock right now. I think a lot of HNI seem to have taken a shine to the stock, and that's what's really pushing the stock price up at this point. But if I were to look at it from a fundamental lens, this is a stock that doesn't inspire much confidence. Well, next stock, Zydus Wellness. Now this has been again one of the underrated players in the FMCG space. It sits somewhere at the intersection of pharma and FMCG.
The FMCG company that is not an
FMCG company. Yes, it is mainly into the health and wellness segment. Now 5 of Zydus' 6 key brands are in leadership positions, so that places it quite well according to Anand Rathi, because if it has to grow these things, it's got pretty ambitious targets. It's planning to increase its revenues by about 2.5 times over the next
Well, ambition is not always bad, but
well,
we have to see the execution.
Yes, 2.5 times over the next 5 years, yes, definitely, and it plans to do that through increasing its distribution network.
It's been investing quite rapidly into distribution.
Yeah, that is one way. Besides, there is also innovation, and then through bolt-on acquisitions, whereby it plans to acquire brands and then merge it with some of its existing divisions. The margins slowly have been seeing some kind of an improvement there, and they are set to return to at least 20% over the next 2-3 years. Now that you are seeing some kind of a easing of input costs. Anand Rathi is the brokerage which is pretty bullish on the stock, CJ.
Well, Santo, my only gripe with Zydus is, of course, if you look at it from a long-term perspective, clearly having market leadership in some of the key brands that it has makes it an attractive proposition. But I just feel that the valuation re-rating that a lot of investors are waiting for may probably not happen, anytime soon. If you look at the stock, it's currently trading at about 50% discount to some of its, FMCG peers.
That is where the opportunity
is,
CJ.
It is also an opportunity, but it can also be, something that can frustrate you, like ITC used to for a long time, because
before it eventually delivered, CJ, don't forget.
We have not yet seen that valuation discount being totally cut off, Santo. We still have to wait and see. Yeah. Exactly. So it remains to be seen whether this discount narrows or not. At this point of time, the signs really are not there that it is narrowing, but probably that is the bet that the market or some of the investors out there would want to make who are bullish on the stock. Apart from that, yes, some of the key products like Nycil, Glycon-D have of course come back to Glucon-D, of course, have come back to pre-pandemic level as far as distribution is concerned, as far as sales numbers are concerned. But whether they show more growth trajectory going ahead, that will be very crucial. I think the September quarter results will really give us a clear indication whether the pent-up demand, whether June quarter was only just pent-up demand, or whether this is now something that will persistently contribute to higher top line for the company. But the only concern would be within the product category, Santo, is Complan. I think Complan is one product where, although they are still holding on to their market share, the competition there is getting intense, especially with HUL, which is the market leader in that segment, now discounting its prices, even though input prices have been rising. So clearly, HUL is gunning for market share expansion there, and in such an environment, I think you can expect that Complan's margins could come under pressure going ahead. Well, the next stock, Santo, on my radar today is from the footwear space, and this is Liberty Shoes. Now, a lot of footwear stocks have done quite well, but I think Liberty Shoes is one stock that has gone under the radar, and this is clearly a play on the renewed demand or the vigorous demand that we are seeing in the footwear segment in India, with people's income rising, with a lot of people coming back into urban areas. Footwear demand clearly is on the rise, and this is one market where people are expecting very strong growth over the next 5 to 10 years. But if you look at Liberty Shoes, especially on a technical level, Santo, it has formed a bullish flag formation recently on its chart, and that basically is indicating that there is further up move in the coming days. Swastika Investmart, which has given us a buy call on the stock, they believe that the stock could rise as high as rupees 294 in the coming session, which would culminate into gains of about 18% over the next 2 to 3 weeks. So clearly, one stock to really watch out for all the traders out there.
Well, again, on technical basis, I think CJ, you may have a point there, but I'm again looking at the fundamental aspect of it. Now, this the general theory was that once the economy starts opening up, you'll see people buying more of stuff, and one of those things, of course, the demand for shoes too is likely to go up. But again, if you look at Liberty Shoes at this point in time, it's still some way off from the kind of numbers that it used to clock pre-pandemic. Now, in many industries, if you see, the numbers are inching pretty close there, but at least in the case of Liberty Shoes, I don't seem to have that confidence.
Well, maybe market is betting on a revival. Let's see.
Possibly, very possibly. They're looking at the technical part first and then the fundamentals.
Yeah, let's quickly look at the market, Santo, and it's clearly been a weak start. Nifty down about 135 points at this point of time, almost edging closer to that 16,800 level that Santo spoke about, and the Sensex almost down 500 points. And
market breadth too quite weak at this point. Yeah. Almost 1,300 stocks are down at this point in time, and less than 500 stocks are up. So the euphoria for small and mid caps that we had been seeing till last week, that has changed for the moment.
Santo, today probably, I think if we see another few basis point cut on the Nifty mid cap and Nifty small cap, the broad market would have officially entered, correction territory. So clearly, now you would see a lot of long hands also start wondering whether it's time to cut their losses or maybe book their profits, because a lot of those profits have already halved. Because remember, from mid-June to mid-September, Nifty small cap and Nifty mid cap had rallied almost 25%, 2023, 25%. Now almost half of those gains are out of the picture. So it will be very interesting times to see whether it capitulates from here on, or maybe we see another bounce back.
Well, March onwards has really been a trader's market if you are able to catch the low and the high, but that is where again market tricks you. So this time there is no saying, but the earlier pattern has still been reinforced, that of lower highs. And
exactly, I mean, we did not cross the previous high about 18,200. I think we were unable to cross that, and now we have again made a downswing. A lot of technical analysts told me that 16,800 is when the view will change on the market. If the market is not able to defend 16,800, then it is possible that we may inch lower and lower from here on.
Well, that's it. Last stock on our portfolio, on our watch list is Gujarat Fluorochemicals. Now, the company had held a analyst meet in Mumbai recently, and many analysts have returned with quite a bullish view on the stock, and one of them is ICICI Securities. Now, according to ISEC, the company is planning to increase capacity in a big way in at least 3 of the fluoropolymers, one of them being FKM, PVDF and PFA. Now, the margins on these 3 products are about close to $25 to $40 per kilogram, which is higher than the EBITDA, average EBITDA for the company across all its fluoropolymer portfolio. Now, this is also fluoropolymers in general is a category which has been doing quite well. And besides that, Gujarat Fluorochemicals has also big plans to increase its exposures to battery chemicals. That is another area which it sees as a big opportunity over the next 3 to 5 years. It's already commissioning one of its plants for battery chemicals in the next couple of quarters, and it's expects huge revenues coming from the battery, solar and green hydrogen areas. So this is a stock definitely to keep an eye out for.
I think, Santo, clearly this is a, I mean, I have spoken earlier also about Gujarat Fluoro, and this is a multi-year growth story, no doubt about it. But I think in the near term, there are a few challenges that may emerge for the company going ahead. The first, of course, being the slowdown that we are seeing in the global economy at this point of time, especially in Western economies, where a majority of the clients of Gujarat Fluorochem are at this point of time based out of. And I think going ahead, demand could be something that really would become a crucial point, of concern for investors. We will have to wait and see what sort of commentary the management has to give with respect to export demand in Q2. Apart from that, Santo, I think the other concern could be the fact that companies trying to enter a very high capex phase at a time when globally, we are entering a slowdown phase. That generally does not do, well for investor confidence. And I would be really interested to see how investors react to this sort of a capex plan at a time when there are question marks over the demand environment. Remember, as far as chemical companies are concerned, in the past, investors tend to react very positively to any sort of capex plans that are announced. But maybe given the shift in the global environment that we have seen over the past couple of months, I wonder if market could probably this could probably weigh on the valuation of the stock going ahead.
Typically, that's been the case in the past, and we have argued about this quite often. That the time to sell chemical stocks sometimes is when it is going in for. At least that's what Stanley Druckenmiller had once famously remarked.
Yes, definitely. But yeah, I mean, chemical companies in India have been enjoying a good time. I mean, barring that COVID sell-off, I think generally they have enjoyed a lot of good faith from investors so far, but it remains to be seen whether that comes into question going ahead.
Yeah, and many sectors, if you look back from the past, IT and all, they've had multi-year bull runs, especially if you look from the start of
and we are already in the in the 5th year of the bull run in chemical stocks, so it will be interesting to see how long this continues.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.